Credit Suisse, of course, one of the biggest losers from the Archegos fallout. What are they saying?
Yeah, the biggest loser. Remember, with $5 billion in losses, they held the lion's share of those losses. And partially, this was because they were later to unwind a lot of these positions that came first over at Morgan Stanley, which lost less than $1 billion, and Goldman Sachs, which went out relatively unscathed. What we know, the new news here, sources have told Bloomberg that Credit Suisse representatives have last week held a presentation at the Southern District, the U.S. Attorney's Office. So yes, when you are involved in an investigation, everyone does tend to give over information. What sources are indicating here is that the information being given over to authorities is a little above and beyond here the routine cooperation you would see of the banks, and it makes a lot of sense given what we saw in terms of Credit Suisse's own losses and their attempt to recoup some of that.
Sonali, obviously these are pretty impressive and big developments. I mean, how does this filter through the industry? What's the reaction out there?
A big reaction. I actually got a couple emails of this myself because the big question here was how Credit Suisse is going to respond to a lot of what happened. Not only did they suffer a lot of those losses, their stock took a massive hit. Executives lost their jobs. And so when people look back at this incident, they think about those specific trades themselves. What happened when it came to Viacom, what happened when it came to GSX, but they also look back at how the banks handled the instances individually and together. Remember, the banks at that time held emergency talks before the unraveling of a lot of these trades. Remember, there are other investigations going on at the same time, Greg. We have reported previously that banks are also facing antitrust questions around what happened here. There are questions around should they have held these emergency talks without a regulator present in the first place, like what would have happened in the era of LTCM. A lot of regulations being discussed right now among the family office industry, and concurrent probes going on among regulators.
Yeah, and we've all learned a lot about block trades recently. Yeah. There's a big gray area here. Is the idea that these banks maybe floated the idea that there were big blocks of shares out there looking for buyers, and then everyone else front ran that trade selling?
Well, there's two things here. One, no one has been accused of any wrongdoing yet. I think that's very important. But what could have happened at that time, a lot of bankers, a lot of the buy side want answers to. Was there any crossing of any Chinese walls? Were there any clients who were inappropriately alerted? These are questions to be asked, but again, there's been no wrongdoing been accused of yet, though this is certainly an investigation that hits to the heart of not just what happened at Archegos, but a very key business on Wall Street and for these massive, massive equity underwriting shops.
So, Sonali, what do we expect the next steps to be here, the next developments in the story?
Yeah, well, slowly things to leak out, right? These stories are coming out one drip drab at a time. One thing that happened yesterday is Morgan Stanley disclosed in its 10K that it was taking questions from authorities on this matter, but that was kind of the extent of the disclosure. It was a single paragraph, Greg. Now we know Credit Suisse's involvement a little bit more, but we will keep an eye out on what tangible things that authorities start to find. We only have clues on what kinds of things they've been asking for.